Coinbase Global, Inc., the largest U.S. regulated cryptocurrency exchange, connecting retail investors, institutions, and developers to Bitcoin, Ethereum, and over 250 tradable digital assets.
Coin generated $7.2 billion in FY 2025 revenue at 86% gross margin. Software-like economics that reflect the fee-based model of the world's largest regulated crypto marketplace.
Brian Armstrong and Fred Ehrsam co-founded Coinbase in 2012 with a simple thesis: crypto needed a regulated on-ramp. The first product let U.S. users buy and sell Bitcoin from a bank account.
Coinbase secured BitLicense from New York regulators in 2017, the first major U.S. crypto exchange to comply. That regulatory first posture became the foundation for its institutional dominance.
Coinbase direct listed on NASDAQ in April 2021. By 2024, it launched Base, an Ethereum Layer 2 blockchain, expanding its role from crypto exchange to on-chain infrastructure provider.
Transaction revenue, spot trading, derivatives, and staking fees generates about 60% of total. Volumes swing with crypto cycles, making Coinbase the most cyclical revenue model in financial services.
Subscription and services revenue accounts for roughly 40%, including USDC yield, custody fees, staking rewards, and base blockchain fees. This recurring layer provides income independent of crypto trading volume.
Gross margins reached 86% in FY 2025, software-like levels from near zero marginal transaction costs. Operating income approached $1.3 billion on $7.2 billion in revenue.
Revenue grew 9% to $7.2 billion in FY 2025. Fee competition and mix shift toward institutional trades compressed the take rate despite significant crypto price appreciation.
Binance leads globally by volume, operating outside U.S. regulation and under ongoing legal pressure. That bifurcation leaves Coinbase as the dominant compliant venue for institutional and regulated capital flows.
Robinhood entered crypto with zero commission trading, targeting retail with a simplified interface. Coinbase's response is Coinbase Advanced, a professional-grade platform for active traders seeking deeper liquidity.
Coinbase's moat is regulatory trust. Being the only U.S. regulated exchange with institutional-grade custody, derivatives, and prime brokerage creates a position that offshore competitors cannot legally replicate.
Coinbase serves over 110 million verified users across 100 countries, with licenses in 40 U.S. states. Coinbase Prime manages over $350 billion in institutional assets under custody.
The United States is the dominant revenue geography. Europe is the fastest-growing institutional market as MiCA creates regulated on-ramps and institutional capital accelerates into digital assets.
Brian Armstrong co-founded Coinbase in 2012 and has served as CEO since inception, guiding the company through 3 crypto market cycles and the transition from exchange to financial infrastructure platform.
Armstrong's defining bet was the regulatory first strategy, accepting compliance costs offshore competitors rejected. That bet became Coinbase's deepest moat as institutional capital demanded regulated venues.
Coinbase, the U.S. regulated crypto exchange, $7.2 billion in FY 2025 revenue at 86% gross margin, with prime custody and base blockchain as the institutional growth engines.
Q1 2026 revenue missed consensus at $1.4 billion as crypto weakness weighed on volumes. The full episode breaks down trading share gains, subscription growth, and fee compression dynamics.
Coinbase just reported Q1 2026, revenue down 30% year over year. The headline is rough, but underneath it, the exchange turned operating income positive for the first time in 2 quarters. Today, we're breaking down what actually happened.
I'm Lana, he's Hudson. This is Charged Alpha, your S&P 500 earnings encyclopedia, ticker COIN, Coinbase Global, Q1 2026 reported today, and there's a lot more here than a 30% revenue decline.
Here's the snapshot. Coinbase reported $1.41 billion in Q1 revenue, down 30.5% from Q1 2025's $2 billion peak. EPS came in at negative $1.49 versus the consensus estimate of negative $1.30, a miss. Revenue also missed. Wall Street expected $1.5 billion. The stock is trading around $193, down roughly 12.5% year to date, and well off the 52-week high of 280.50.
So both lines missed estimates, Hudson. Top line short by 87 million, bottom line short by 19 cents per share. With crypto prices choppy all quarter, that wasn't a total surprise. What is the one metric buried in these numbers that actually changes your read on the stock?
Operating income. Coinbase posted $35.2 million in operating income for Q1, coming from a $444 million operating loss in Q4 2025. That turnaround is the story of the quarter. It signals that when trading volumes normalize, the operating leverage on this platform is enormous.
Let's break down the revenue mix. Transaction revenue was $1.08 billion, 76% of total revenue, meaning Coinbase's earnings remain tightly coupled to trading volumes. But subscription and services revenue hit $329 million, growing over 15% year over year. That's the business that earns when Bitcoin is flat. It's becoming a real counterweight.
Gross margin held at 86.1%, essentially unchanged across every quarter in the past year. Gross profit was $1.217 billion on $1.41 billion in revenue. That structural consistency matters. It means when revenue scales back up, virtually every incremental dollar drops through at the same high margin rate.
But GAAP net income was negative $394 million. Operating income positive $35 million, net income negative $394. That's a $430 million swing in a single P&L. What's creating that gap?
Crypto asset mark-to-market accounting. Coinbase holds significant crypto on its balance sheet, and under current GAAP rules, unrealized price declines hit net income. When Bitcoin and Ethereum fell during Q1, those paper losses flowed through. It's non-cash, but it's real accounting drag. The operating business, revenue minus operating costs, was in the black. That's the number that describes the underlying engine.
The 5-quarter revenue trend tells the full story of this business. Q1 2025, $2 billion. Q2, $1.5 billion. Q3, $1.87. Q4, just over $1 billion, the trough. And now Q1 2026 at $1.41 billion. EPS followed the same arc, $5.60 in Q2 2025. Negative $2.49 in Q4. Volatility is the baseline with Coin.
Here's the bull case, and I think it's genuinely compelling. Start with Base, Coinbase's Layer 2 blockchain built on Ethereum. Base is growing faster than almost any other Layer 2 by developer activity and transaction volume. Sequencer fees are still small but accelerating, and the DeFi ecosystem on Base is creating revenue streams that didn't exist 2 years ago. This is Coinbase building financial infrastructure that earns regardless of trading volumes.
Then there's institutional custody. Coinbase is a primary custodian for several major Bitcoin and Ethereum ETF products. As institutional capital flows into crypto through regulated vehicles, Coinbase sits at the custody layer, earning fees on assets under custody that grow as ETF assets grow. This is durable, low-volatility revenue that benefits from every dollar of institutional adoption, independent of whether crypto prices are rising or falling.
Third, regulatory clarity. The U.S. environment for crypto has shifted meaningfully. New SEC guidance and favorable congressional action are removing the overhang that kept institutional players sidelined. More institutional participation means higher trading volumes, which means Coinbase's transaction revenue recovers. Add international expansion under Europe's MiCA framework, and you have multiple geographic vectors.
The bull case math is clean. 86% gross margins mean operating leverage kicks in hard when volume returns. If revenue recovers toward the $2 billion range, operating income doesn't just turn positive, it could multiply. Analysts have a consensus target of $225, 17% upside from here. At 8 times sales, the stock is pricing in a prolonged bear cycle, not a recovery.
Now the bear case, and it's real. 76% of revenue comes from transaction fees. That is crypto price and volume dependency that no amount of diversification has fully solved. If Bitcoin and Ethereum fall another 20 to 30%, Coinbase's revenue follows. Q4 2025's $1 billion quarter is your cautionary data point.
The GAAP net loss of $394 million matters too. Yes, it's driven by mark-to-market, but it reflects balance sheet risk from holding crypto assets. Competition is also intensifying. Offshore exchanges operate with lower compliance costs, and decentralized exchanges are capturing volume that would have flowed through Coinbase previously.
And despite a friendlier regulatory environment, enforcement risk hasn't gone to zero. Any adverse regulatory action, new restrictions, international enforcement could crimp volumes overnight. Bears argue the stock at 8 times sales is expensive for a company that just missed on both lines and carries a $394 million GAAP loss.
Let's go deeper on risk. The crypto cycle is the most fundamental. Coinbase's entire revenue history shows a company that earns extraordinary returns in bull markets and gets crushed in bear markets. With a beta of 3.38, the stock amplifies broader market moves threefold. That means if equity markets sell off 10%, coin can fall 30% or more. Investors need to underwrite that volatility explicitly before buying this stock at any price. The reward-to-risk profile is high in both directions.
DEX competition is a structural risk the market may be underpricing. Decentralized exchanges like Uniswap are taking a growing share of crypto trading volume without any intermediary, which means Coinbase earns nothing from that activity. If the trend towards self-custody and DeFi accelerates, transaction revenue faces secular pressure, not just cyclical pressure. Subscription and services revenue is the hedge against that outcome, but at 23% of total revenue today, it's not yet large enough to fully offset a structural shift.
The balance sheet is one of Coinbase's genuine strengths. $10.5 billion in cash gives this company durability through an extended crypto winter. Total debt is $7.2 billion, but the net debt position is negative $3.3 billion, meaning net cash exceeds net debt by more than $3 billion. That cash balance funds operations, technology investment, and opportunistic acquisitions without needing to access capital markets at the worst possible time in the cycle.
Operating cash flow was $183 million in Q1, and trailing 12-month free cash flow is $800 million. Price to free cash flow sits at 57 times, elevated but defensible for an 86% gross margin platform with optionality across base, ETF custody, and international markets. Forward estimates project revenue recovering to $6.2 billion for full year 2026 and $8.1 billion by 2027, with EPS turning positive at $2.80 by then.
On the options market, implied volatility for coin remains persistently elevated, consistent with its 3.38 beta. The options market is pricing in significant post-earnings moves, which creates rich premium for sellers but makes directional bets expensive. The skew reflects genuine uncertainty about when the crypto cycle turns, and that's precisely the environment where disciplined dollar-cost averaging tends to outperform trying to time a single entry point.
On insider activity, Brian Armstrong and the broader management team have been steady holders. No significant insider selling has been filed in recent months, which signals at minimum that leadership isn't rushing for the exit, despite the stock trading well below its highs. Institutional ownership is also strong, with major asset managers maintaining positions, suggesting the professional shareholder base views this as a long-duration crypto infrastructure play.
One additional angle worth flagging: Coinbase's valuation on a price-to-sales basis sits at 8.1 times. That's not cheap for a company missing estimates in a bear market. But relative to its own history and to the potential earnings power in a bull cycle, it's a number that long-term investors can work with. If the crypto cycle turns and revenue approaches the FY2027 consensus of $8 billion, today's entry point looks attractive in hindsight.
The analyst community remains broadly constructive. 18 buy ratings, 12 holds, 3 sells, and 5 strong buys out of 38 analysts covering the stock. Consensus price target of $225 implies 17% upside from current levels. Recent upgrades include JP Morgan moving to overweight in April. The bears are in the minority, though the miss on both lines today may prompt a round of estimate cuts. This episode is for educational and entertainment purposes only. Nothing discussed constitutes financial advice or a recommendation to buy or sell any security. Charged alpha may hold positions in companies discussed. Always do your own research and consult a qualified financial professional before making any investment decisions.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.